Hello, my friends. Let me make sure my mic is working. Wait. Hello, my friends. We're going to get into this pretty fast. So, this video is going to be a little bit different than my normal. It's going to be a little bit different than a normal structure. I'm going to do these trading videos. Typically, what I'm going to do is I'm going to have a Sunday video where I pretty much hold myself accountable to really you guys in terms of what I'm looking for, in terms of where market is, where I'm thinking the bond market is likely to go for the week. And then I'm going to go over the things I'm really focused on, making sure that I do the week going ahead. And then those that'll be things. So normally these Sunday videos will probably be like 15 minutes. That's what I would like to keep them down around 15 minutes. This video in particular is going to be around an hour because I'm going to do two videos in one. Basically, I'm going to do what I'm expecting to happen this week going ahead and what I did on Thursday's trading session. So Thursday was the last day that I took a trade this week. I took one trade before that this week, I believe. I don't know, was it this week? I took one trade before that this week on Tuesday, and it was a losing trade. I made that trade back on Thursday. I'm gonna play Thursday's whole recording of the trading session, just so you guys can hear the musings, hear what I was thinking about, hear what I was looking for in the marketplace. Just so you know, I didn't like, well, not. Anyways, you get it. It's pretty much just like any other um, look back into the market. It is live market data. It is me taking a trade on an actual funded account. It is all of that, all the bells and whistles when it comes to that type of front. Um, I'll let you know what I'm expecting to happen. I entered the well. I think by the time I had started the video, I had literally just entered the trade. So the trade's gonna be, you're gonna see it experience drawdown, and then you're gonna see it do what it does. So I just want to give that disclaimer that the videos will not normally be like this on Sunday. Sunday's video will typically be only about 15 minutes because I'm going to very quickly, let me take these levels off the chart too. I'm going to very quickly run through what I expect to happen in the market. I'm only going to be focused on the bond market. I'm going to go through also the 10-year and the 5-year, but they all do the same thing as the bond market. Typically, less it's like an S&T. So majority of my time in this video is going to be on the bond market, and then we're going to get straight to it. So first things first, we want to go to the highest time frame. We're going to look at the monthly chart. Also, every single week, I'm not going to be going to the monthly chart. Typically, I'm going to start on the weekly and go forward, but since I haven't done one of these videos yet, I want to let you guys know what I'm fully anticipating is going to happen within the next 2 to 3 months. Um, yeah, within the next 2 to 3 months. So, with that being stated, I should have had this pulled up before, but I can do it real quick so you guys can just follow along with me. Let's go here, go here, go here, go here. So, right, what I'm doing right now, I'm just pulling up. You're gonna see it in just a couple seconds. Right now, I'm just pulling up the. This is MRCI. Um, ICT has spoken about this a lot, obviously. If you don't have it yet, it's a really great tool. They have all types of good stuff. I use this for my seasonal tendencies and my intermarket correlations. So um, I'll let you know exactly how I use that in a couple seconds of the intermarket correlations part. But basically, on Sunday, what I'm doing every single week is I'm starting the week off on the seasonal tendency. So where are we at the current time in the market, and where does that put us seasonally? So for today, we are obviously in July, and it is June 7th, as you can see. Well, you can't see it because I have that part cut off on the screen, but it is June 7th, 10:10 p.m. New York time. So what I'm doing is I'm looking at the fact that we are pretty much right at that, about 40% of what we normally see in the bond market in terms of bullishness. So typically we see a low forming in May or June in the bond market, and it runs all the way up into September, October, November. That's what you typically see. And so what I'm looking at every single week, just to refresh myself, is where are we at seasonally and what does this week typically bring us in the seasonal tendency. So typically what we have is last week, the week that ended on June 5th, we typically see a low formed in the marketplace, and that low pretty much goes up for the rest of the year. Well, not the rest of the year, but up until around September. September 1st, around that area. So, really about the last week of August. So, it doesn't really take too long. You can't make 500 thoughts about what's going to happen. This is 40 plus years of back testing. This is 40 plus years of them doing really good work and finding out the seasonal tendencies. Obviously, it's not a be all end all, but you do want to put yourself in what normally happens, especially when you're talking about markets like commodities, markets like the bond in particular. It is a very big trending market. It is based obviously on the Fed interest rate. So the Fed typically lets you know what it's going to do. The Fed also has like an interest rate cycle that it does throughout the year, and it really it looks a lot like the accumulation, manipulation, distribution cycle that ICT talks about, Power Three, hint, hint, nudge, nudge. Now, so I don't want to spend too much time here because I don't have to. Basically, what I'm looking at is the fact that this week, the second week of July, typically is a bullish week. How do I see that? Obviously, here's the 6th, the end of the 6th, around the 15th. We usually have a high made in the marketplace. Now, that's number one and what I do going into the week. Number two is I want to look at the intermarket correlations. This is also another MRCI tool that they have. I'm looking at just a 30 day. You can look all the way up to really the 90, 60, 30 day. You could, when I'm doing like a full rundown month over month, that's what I'll look at. But typically, I want to look at the last 30 days. Now, what am I looking for? I'm going to highlight the market that I watch, which is the bond market, and obviously the 10-year note as well. But I only trade the bond market. The 10-year note, the 5-year note are just barometers for me. They just let me know how strong my move is, when to enter. Well, they confirm when I should enter. I should say they don't give me timing, but they do confirm when I'm going to enter. But basically, what I'm seeing is uh, what I'm really looking for when it comes to the bond market is just to see this one here, which is the dollar index. I'm looking to see how correlated the dollar index has been in the last 30 days. Now, what this does is it lets me know how deeply I'm going to look at the dollar index. So for the last few weeks, about a month and a half, last 6 to 8 weeks, the bond market has not been heavily asymmetric, heavily going in the opposite direction of the dollar, which is the normal, what you expect to happen. But when it comes to the dollar versus the bond market, as opposed to other index, as opposed to other futures, I should say, or other assets in general, is typically you're going to see that risk on, risk off. So if dollar is going lower, that's going to be risk on. If dollar is going higher, that's going to be risk off. This is as simple as that. Pretty sure I said it correctly, but I promise you I traded it correctly. But anyways, so basically, but when it comes to the bond market, we can be moving in the same direction as the dollar. That just lets you know that we're probably in a longer term consolidation, which means we can still have moves. Because when you talk about long term consolidation on the day to day charts, on the daily chart, you can still see nice price moves, price legs, and then have a good biases going into the day. But you're typically not going to see those crazy price runs. Now, when they're moving, kind of like right now, we're at a 20. Whenever you see a negative number here, it means that it is asymmetric, which is going in the opposite direction of the market of the asset you're looking at. And whenever you see it as a positive number, that means it's moving in correlation. I really only look for 90s or higher, typically. You can look at 85s and things like that, and it will help you when you're looking at those 4 hour above time frames, 2 hour above time frames, really 4 hour above. But other than that, it really doesn't help me too much because I'm looking at it to see this gives me should I have the dollar index up on a day to day basis or not. Now, if you're trading currencies, if you're trading the British pound, if you're trading any currencies, if you're trading currencies, you gotta have the dollar up every day. It just is what it is. You signed up for that because you're trading currencies. If you're trading the index futures, it behooves you to have the dollar up every single day. But for the bonds, you don't need the dollar to up every single day if it's not at an 80 or a 90% negative correlation, or if it's sometimes it's really in a deep correlation, like a positive correlation. I'm still only looking at that if it's at the Really, for me, it's 90 or above. So just put that out there. Last 30 days, 90 or above. That lets me know if I should have the dollar index up on my chart at all times. Will I look at it throughout the week? Possibly, maybe in the beginning of the week. But if it's not in that time, if it's not in that higher tier correlation, then I'm not going to really be looking at it. So this week it is at a 25, or last 30 days it's at a 25% positive correlation. That just lets me know I won't be looking at the bond market going into this, or I won't be looking at the dollar index. Apologies. I won't be looking at the dollar index at all going into this week. I'll probably just take a peep at it right now. I already did before this video, for transparency's sake, but I really won't be looking at it throughout the week. Again, that is because I'm trading the bond market. I know that some of you guys trade other markets, and whatever discipline that you're moving with, risk parity, you're going to want to use a dollar. But again, the bond is really the only market where there are some times where it's just okay to just not look at the dollar at all. So I'm going to continue on. So like I said, start off with the monthly chart. Normally I will only start off with the monthly chart on the first, whatever week ends that first day, or let me say it correctly, whenever that week ends that comes upon the first day of the month. So let's say it was July 1st today, or it was July 2nd because Friday was July 1st. Then I'll be looking at the monthly chart. But typically, I'm not looking at the monthly chart every day or every week. I'm only looking at it when that monthly candle closes. So 7 days ago is when I typically will be looking at it. But like I said, since I'm doing this first review, I want you guys to have like the full spectrum of what I'm expecting to happen and how I go about looking at my market. So here we go. First and foremost, we came down. We made a low here in October. Took out some lows from back here. Made a swing low here. Came up. Didn't break any highs, but this is the monthly chart, so you gotta look at it with the terms of it could take a lot longer to break a high. So didn't break any highs. Dropped back down into like a discount, optimal trade entry type of scenario, and since then we've been moving up. Okay, so if you want to go into the PD arrays or like the order blocks or whatever, I'm just gonna call them PD arrays. Also, I should probably discern that I do trade from the ICT methodologies. So a lot of the stuff that I talk about in these videos, I'm gonna not try, as I get deeper into making these videos. Whenever I mention a certain maybe PD array, or mention a certain like seasonal tendencies, for example. Obviously, ICT and event seasonal tendencies, but it uses them really well. I would link the video in the description where I learned the most from seasonal tendencies from ICT's content, just so you guys can always be following along with that term. Because I'm not gonna teach much besides like how to get over fear, how to get over greed. But as far as like actual entry mechanisms, I mean, I don't see myself teaching that type of stuff. ICT has a complete catalog, hundreds of free videos where you can literally just learn, but I will direct you to videos that had the most impact on me. But getting back to it, we pretty much have this return down to discount, return down to optimal entry, order block fills in this fair value gap, the whole shebang. And since then, I have been expecting, with the seasonal tendency, because May, June, remember, makes a seasonal low, which we have that here. The low is made with this 3 swing that ends on May. June was a bullish month, closed kind of indecisively. Not really indecisively, but it didn't close heavily bullish like this month. But I don't think that stops anything because of the seasonal tendency, because of the fact that we have liquidity above here. We have liquidity above here for value gap in here. And then we went down we've been going down since really around the time of COVID. So we finally made a nice low in the marketplace, dropped back into it, and it looks like we found some support with another swing low made. And actually, based on the Model 22 content, which is what I trade a variation of the Model 22 or Model 13, which is whichever way you want to call it. It's the same thing. That 2022 mentorship from ICT is what I trade, but I trade a variation of it. So just so you guys know in the future. But pretty much we have a drop down intermediate low made here. Why is it an intermediate term low and not a short term low? Because we dropped down and we filled in this fair value gap here. whenever you fill in a fair value gap on a higher time frame chart and it ends up filling it in and making a swing low there or a swing high there, that's going to be treated as intermediate term. So let's go to the next one. Like I said, I don't want to spend too much time in this portion of the video because this is going to be a longer video because I'm putting a 40-minute recording of my session in the after I'm done with this. So I don't want to spend too much longer with this, but let's continue. So next we're going to go into the weekly chart. I'm not going to put any PD arrays until I get to the daily chart also. Maybe I'll cycle them on quickly, but I don't think so. Anyways, so now we're looking at the weekly chart. Here's that low that we had just that I was talking about. Let me go right back to it. Here's that low here, here. So we have that low. Had another stop run type situation here. Comes up, drops back down into a discount, into an order block. I think we actually missed this order block by like a tick, if I'm not mistaken. But same thing. Went down, got a discount, came back up, cleared low here, and since then we have cleared another high, dropped back down again to find another discount into this propulsion block. Last week we closed bullish, and I'm expecting that all of this is likely. Now, do we get it in one big candle, like one big week like this? I don't really expect that. I expect it to go up week by week and just trend. But what would make me wrong in that aspect? If we came back below this low here, or even if we close on a weekly basis below this rejection block, which is just the lowest body, the end of this body on the downside, if we close below that on a weekly chart, it would turn me into not bearish yet, but I would be okay with entering bearish trades on a day-to-day scale. But like I said, and like pretty much anybody who trades, not just ICT stuff, but anybody who trades off of these higher time frame charts who does it consistently and well, they're not picking tops and bottoms on these weekly or monthly charts. Or the daily chart usually. You want to just go with the trend until it is no longer the trend. If that leads you into a losing trade, it is what it is. Now, gonna go to the daily chart now. Gonna re-pop this, and then on the daily chart, I'm only gonna be looking at the last 60 days pretty much. Really, you can look at the last 20 days, but I'm gonna look at the last 60. So let me pull this out. This is gonna pull up my PD array, so watch your eyes. Right around here, 71, we can use that. So let me go take all these off again. So from here to here, pretty much what I saw is, I saw that, like we said, we made that low all the way back here. We came up, came to a discount, made another high. Came to a short-term discount again, made another high. Dropped down into a deeper discount, clearing an intermediate term low. And since then, we made a propulsion block here, an intermediate low here. And not only is this an intermediate term low, but it has the makings of a long-term low if, bold if right there, if we come back down, within, I don't know how many days it could take, it doesn't matter. If we come back down and make another intermediate term low on the right of this, then this low would be very, very consequential. And we probably, like I was saying before, we could start seeing all of these highs getting taken out because these are low resistance. So I think this is going to get taken out at some point. But pretty much the trade that I'm going to show after the weekly recap is done and the weekly what I'm expecting to happen and what I'm focusing on making sure I'm good at this week is going to show a trade that was on, like I said, Thursday. So you're going to, or not Thursday, a trade that was on Wednesday. Sorry. I said Thursday early in the video, and redact that, strike that. I didn't take a trade on Thursday because that was July 4th. I took a trade on Wednesday. So you're going to see a trade that was on this candle here before it was any of this. You're going to see basically me taking a trade on this candle, but based on the information that was presented from this close and prior. So that way you know that this is not just me jumping ship and now that the last couple of candles were going up and I've been, a buyer. No, I've literally been believing the market's going to go up for a while. So, and executing on it. So let's go into, so here's the daily chart. We cleared these lows. If you're thinking like a bank, if you're thinking like smart money, which is in ICT's methodology, which we do, I'm looking at it like, okay, you had people who were Sellers below here, you have people who were buyers who kept trailing their stops up and their sell stops here. So I'm looking at it like they claimed, by they, I'm talking about the algorithm, I'm talking about smart money. Smart money cleared this stop here. There's a bunch of sell stops below here, and I feel like they're going to offload those sell stops above these relative equal highs. Now, the fact that we have a high to the left of this and a high righter means that we're going to need to see heavy expansion through this. I don't want to see it come up and then teeter totter around, because that could be not good. Basically, that's all I'm going to say like that. That could be not good just because we have a higher high, higher high, higher high. But in the terms of this looks like relative equal lows or relative equal highs for me. So I'm thinking we're going to come up there and clear that, especially based on everything that I said in the beginning of the video. The seasonal tendency is bullish until last week of August. Um, Monthly chart looks bullish. We made a low, intermediate term low. Weekly chart looks bullish. Same thing. So same thing here. Nothing changes. Now I can go ahead and put in my PD arrays. Now again, don't let this like, oh my gosh, you got so much stuff on your chart. This is just what you gotta do sometimes until I'm not at the point yet where I could do it like ICT does it and doesn't have all that stuff on the chart when he's trading. Right now, I still need this stuff in my chart just to like let me know when I look at the marketplace what I'm expecting to happen. So, quick TLDR on this. Basically, like I said, we came back down to a discount, which was model 13 fair value gap as well. Why is it model 13 fair value gap? We dropped down, cleared a low, came up, cleared a high, fair value gaps left. We expect if we were trading this on a like any other time frame that isn't a daily chart or like a 4-hour chart, if we're trading this on a intraday chart, obviously the model dictates that you put a limit order here, but have enough stop to cover all of this because it could come down here. Now, because we're on a daily chart, and because we had this move up and we dropped down right above this high, I was expecting that we're going to get a deeper discount. I didn't expect, full transparency, I didn't expect this low to get taken out. However, there are some things that let me know that it was going to get taken out and that it should be trusted as a stop run that I'll get into in a couple minutes. So, came back down, dropped into this volume balance. This is also a volume balance on the weekly chart. I'm pretty sure I can go look at actually a monthly chart. Volume balance on the monthly chart, and then we drop down into this model 13 fair value gap. Both of them. Look at the bodies there. Beautiful, 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 beautiful. Dropped up, came back above this order block, made it a propulsion block. Why is it a propulsion block? Because we dug into this order block here, then we came back above it. Very simple. Now going forward, I'm expecting that this fair value gap, which is this candle's low, single pass. This is a little bit different, so you gotta kind of look at the, you gotta really look at the, gotta really look at your market here. So this one's a little bit different of a fair value gap. Well, not really different, I could say, but you see how we have this low here, this high here, and we have no real up movement except for like the move that happened in this candle. It's the same thing as this, but it just looks a little bit different. Basically, is what I'm saying. Because we have this gap opening here, it's a little bit different, but it's still a fair value gap. And then if you go down to a lower time frame chart, which I will after this, you'll see that it is a fair value gap. But anyways, since we have this here, we drop back down. I'm not expecting this is like a fair value gap where it goes short at. I'm expecting that it's going to be used as somewhere that price should find resistance at, or should find support at, because we're bullish. Easy, simple rules. Let's go down lower, and you see how we broke this, and now this ends up actually being 2 consecutive fair value gaps. I do know what I'm talking about, guys. I have been studying it for a good long time, executing on it. Did the demo, did tape reading, did the demo, got funded, a bunch of like a few accounts, and haven't lost any of them. So I'm telling you guys that I do know what I'm doing in terms of this. You will see me take losses. I will put losses on my YouTube channel, all of that. So anyways, so we drop down here. This is the 4-hour chart now. This is the last chart I'm going to go into. But there's one thing I want to show you guys. I said I want to show you why I thought that this low, and I'll link this in the video too, or I'll link this in the description. There's a video that I really take a lot of my bond trading from. Were really all of the bond lessons that he talks about. Pretty much anything that I scoured ICT channel for bond stuff, because once I figured out it was my market, I wanted to find everything he talked about, and that was also one of his main markets back in the day. So I love hearing him talk about the bond market because you can definitely hear his he's confident in a lot of his, in all of his trading, obviously, but you can really hear that it's a nostalgic market time. So basically, let me turn all these here though. When we cleared this here, we did not, and this would normally be a time where ICT says pause the video. What do you see? If you pause the video right there, I'll give you a second between these three. Okay. Anyways, I don't even know if pausing the video will work right there because I don't. I should just have these pulled up on three. But as I said, this is my first video. We'll get it. We'll get it. We'll get it together as we go. Anyways, so we have here that we came down to this low. We didn't break this low from June 10th. Came down here, didn't break this low from June 10th. Came down here, did break this low from June 10th. So this is what allowed me to know that we probably are just taking some people out of the market here, and we're gonna send their. We're going to pair those orders with the orders that are above here, at least for the first run. We could go much higher. Like I said, there's so much liquidity above there. And then if you start to draw like trend lines and stuff, like the diagonal ones, there's a bunch of traders who are like clamoring, thinking that this is like a downward trend line, diagonal, downward channel. It's fodder. All of that's fodder up there. So basically, that's what I'm expecting. They were going to continue to go up, but I just wanted to let you know, like, this confirmed what I expected. And then in the video that I was alluding to, two videos. One video, because it's on a daily chart, there's a video called Bond Mega Trades. I think it's in month 10 of the mentorship. Actually, I think it's in month 12. Maybe month 12. Oh, no, it's not month 12. I think it's in month 10 or 11. Actually, it's in month 11. Pretty sure it's in month 11. Bond Mega Trades. He goes over the whole, like, pretty much the exact thing that I just did in the beginning of the video, like the season tendencies and everything. Bonds are really simple where it comes to, you really only look for seasonal tendencies and the debt instruments correlating or not correlating, which is the debt instruments is just the ones that we look at. There's obviously a bunch of debt instruments, but the ones that I look at, the ones that ICT traders look at is 30-year, 10-year, and 5-year. You can go look at the 2-year or do any things that you want to do like that on your own time, but that's all I'm going to talk about. Anyways, so I just wanted to let you know, just want to highlight that right quick. That's the reason why I was very, very even down here on Tuesday, knowing that I was going to trade on Wednesday based on this, because I'm like, okay, this is like, oh, this is clear, this is obvious that we're going to come at least back up to, in here, but really I think it's going to go here. Cool. So I want to just drop that on there real quick. Now the next chart I'm going to go to is the 4-hour chart. Going to 4-hour chart, I'm going to use this chart actually. Now the 4-hour chart, this is pretty much what I call my session bias layout. This just lets me know when I come into the marketplace, where is the liquidity that I'm expecting price to reach for. And in terms of this one, I'm expecting, like I said, same lows. I'm expecting price to continually reach for, okay, promise I know how to use TradingView, guys. I expect price to continually reach for this. Can I be wrong? Of course, but and so proven wrong. And I told you what proves me wrong on the higher time frame chart. This is what I'm expecting price to draw towards. So that's what I'm looking at. That's pretty much it, guys. Like I spent a little bit longer than I would have liked. So I'm trying to think. What I'll probably end up doing is posting this video by itself and then posting Wednesday's trade as a separate video, because I don't want you guys to have to sit through an hour and 10-minute long video. I'd much rather you sit through a 35-minute video and then sit through a 45-minute video on your own time and you can watch them. But I just wanted to make sure you guys knew that what I'm expecting to happen here. I'm not just jumping on a bandwagon. This isn't something that I just, because price has been going up, jumped on a bandwagon. No, I've literally been expecting this for months and been trading it for months. So in the next video, you'll see last Wednesday's trade based on the information that I have been expecting, which is bullish prices in the bond based on what I just talked about in the beginning of this video. But this market recap will basically cover what I'm expecting going into the end of this week, which is going to be, let me go check what's the end of this week. So on next Sunday, at next Sunday, I'm going out of town this weekend, so, but I will try to have this video up. I only need my computer and a charge, so I should have this video up. It doesn't take long to do anything like this. Next Sunday, I'll have a recap of how my trades went, how I did on my accountability part, which I'm about to talk about in just a second. And yeah, that's definitely a better way to do it. So every Sunday you can expect a video for sure, and then I'll try to put at least one trade video per week on the channel. Sometimes there'll be losses. I typically only take full transparency. I typically only take 1 or 2 trades per day. So there's a lot of times, not a lot of times, but there are times where I will leave the market with a loss for that whole day and not go back in. And that's just how it works for me. You do what you do. But just so you guys are not expecting like, oh, he lost today, I wonder when he's going to get in again. No, you'll see it when I post the video. But anyways, so yeah, I'm expecting prices to go up here. I don't really have to berate this. This is a order block from the weekly chart. That one that I said that if price starts closing below like this low, if we go like below this low, I don't really like it. I don't like it, but I still wouldn't be bearish, but I would take bearish intraday trades until proven otherwise. If that makes sense. But again, I want to see price go up here. Talking about one more thing chart wise, I'm gonna pull up this other chart real quick so you guys can see that. Well, and then as time goes on, you guys will see like more about my actual trading style is like when it comes to like taking entries. But the most important parts are what I've already shared today. Like the entry is like the smallest thing, guys. Like I promise you, I was in the same boat as a lot of traders who hear that and are like, oh my gosh, the entry is everything. Dude, I spent so long. I went through the charter membership. I started on trading in 2018. I found ICT in 2020. In that 2-year time span before I found ICT, I used at least 50 different trading styles. At least. Like, at least. And I mean trading styles. Not just, if we talk about indicators, I've used hundreds. But trading styles, like when it comes to like Elliott Wave, Ichimoku, trend lines, all of that stuff. I've used literally everything. So, like, I mean, we're in COVID. It's gonna be I'm gonna keep this video under 40 minutes or 40 minutes on the dot probably. When we're in COVID, dude, I use every single day. I use 12 different indicators. Anything that didn't make sense to me, I would keep it on my chart for about 3 days and then go to the next thing. And I did that every single day, every single week for almost 2 years. Then I found ICT stuff and I was like, okay, this makes sense to me. this makes sense to me. Let me go see what's happening here. And from then, it took me a good amount of time to be profitable because of what I just said before. I focused so much on the entry mechanisms that like every time ICT would teach a new entry mechanism, I would like not give up, but like I'll put the stuff that I have been learning from his content on the back burner and go to the next shiny tool. So, word of advice, don't do that. But I'm not going to go into a deep talk about that. That'll be a different video. Anyways, now the one thing I want to show on this chart here is this. I'm assuming, and I would like to see, ICT teaches something you can look up on his YouTube channel called Six Sister. That's a version of SMT, but it's not the version of SMT where I was talking about before, where I'm expecting price to go, where I was expecting price to go higher, or it confirmed that price was going to go higher to me on that daily chart. This is more so, I'm expecting the bond to get alignment with the other two. Why? Because we're bullish. I mean, that's the easiest way because of what I've already previously stated in the last 35 minutes of the video. I am already bullish. So because I'm already bullish, these minor SMTs, and I mean, I guess you could make a case that this is a minor because it's on the daily chart as well. This to me is minor because we're bullish. So we'll see, obviously, if we start getting a big candle completely overtakes this, makes a bearish propulsion block, then obviously I'm wrong and it is what it is. I'll still be trading it the opposite. I'll trade the opposite way. I have no issues with being wrong. But yeah, that's the only thing that's like I'm looking to see some point at some point in the market this week. That's what I'm expecting. That we're gonna get the bond's gonna have to get into alignment. The longer we stay below this, the more we could probably need some consolidation. I'm not gonna forecast going lower for the reasons that I already said, but we could have some consolidation if we don't start coming back up here. Like consolidation through here. We have two Fed meetings. So that's the last thing. So before I get to the economic calendar, the things I want to hold or I'm going to hold myself accountable this week is I have a grading system on my trades. So I have A through S tier setups. S tier is the best type of setup that I can look for, and it has 4 components into it. Let me go pull this up. I'm not going to show you guys this yet because, like I said, I'm going to have a whole video quickly, very quickly, letting you guys know what I look for. But pretty much it's Model 13. But like I said, it's a variation of it. So my S tier setup has 4 things, including a Model 13, 2-hour PD array, a special. Now I'm not gonna call it a special type of fair value gap because I don't want any of you guys thinking that I got some juice that ICT hasn't taught you guys. High probability fair value gap. That's what I'll call it. Which is look at Model 13 or look at the 2022 mentorship, and he will literally say the fair value gaps you want to use. You could take that as your high probability fair value gap. And lastly, the triad SMT, which is the SMT between these on a 15 or 5-minute chart, preferably a 15-minute chart. Why do I use that? Because if you go through the bond content in month, I think it's 5, month 5 on his YouTube channel, on ICT's YouTube channel, you'll see that one of the biggest tenets of bond trading is using these 3 averages, like using these 3 debt instruments. Like this is like one of the biggest tenets. So while in Model 13, he doesn't explicitly say, you have to have SMT. For me to call it an S tier setup, because of the things I know about the bond market, because of the things he's taught about the bond market, it just behooves me to use this. It allows me to enter the trade. But basically, the accountability thing I'm holding myself to, and I'm gonna put this on the chart just so you guys can. Oh, I forgot. Let me do it like this. Let me do it like this. Note. Sticky note. I don't know why sticky notes randomly has an update, but what I wanted to do was just literally put that as an accountability thing. But sticky notes has to update, so I'm gonna let it do what it does. Basically, my goal, I have it written down right here in front of me anyways. So my goal for this week is to take every S tier setup that presents itself. Now, why am I doing this? I recently started this grading system. I didn't change my methodology or like trade or anything like that. But what I did do is I made it very clear and in front of me when I'm trading the highest probability setup that I like to trade. Versus an A setup is it's missing one thing out of the S tier, and then an A plus setup is missing one thing out of the S tier, and an A setup is missing 2 things from the S tier. They're all still good trades because they all still have confirmation signals from the Model 22 mentorship and from what I've learned from just being an ICT student. So that's pretty much, that's why I don't have them like B, C or anything like that, because I won't take B setups. I won't take C setups. That's like a thing that's really shine a light in me. And then it made me that's why my goal this week is to just take every S tier setup that presents itself, and take it in funded accounts, not just demos. Take it in funded accounts. Now, again, if you guys are trading, wherever you are on that scale of tape reading to demo to funded to live. Wherever you are on that spectrum, that's where you got to go. That's what you got to find within yourself to figure out when you're ready to go to the next spectrum. Don't take my word. I just want to put that disclaimer. Anyways, but yeah, this week take every single S tier setup that presents itself between an S tier also puts time into that. I do trade between 8 o'clock and 11 a.m. So there's a little bit of interlap. I have New York Kill Zone 7 to 9 a.m. or New York Open Kill Zone I should say 7 to 10 a.m. and then there's like that sweet spot 7 to 9 a.m. that open, and then I have the London close, a little bit of that in there. Obviously, 10 to 12 a.m. is London close, so I have a pretty much overlapping session. But that is the bond session. That's why I implore you guys, if you ever want to learn how to trade the bonds, or even if you don't want to learn how to trade the bonds, you just want to learn how to trade every other asset, but use the bonds for helpfulness because they're helpful in every asset. Go through that bond. I'll link it in the description. That bond the bond teachings ICT did. But yeah, that's pretty much it. I talked to you guys' ear off for 41 minutes. I really see how quickly ICT could do this, dude, because I promised I meant to have this done in 15 minutes. So I'm going to say going forward, this is probably going to be 20 minutes. I had to kind of give you guys a TLDR. So I'm expecting this one is okay for it to be a little bit longer. But going forward, I'm really going to try to get this to 20 minutes because it doesn't take that much long. It doesn't take that long. Basically, to surmise or to in summation, I'm expecting prices to be higher in the bond. Let me give you a level because I know you guys like levels. 120.24 is what I'm expecting. First level 120.15, 120.24, 119.21. Those are the three levels that I'm looking at going forward into this week specifically. We don't have to hit them all, but that's my draw on liquidity. Summation, one of the things that I'm working on this week is make sure every single S tier setup that presents itself in my trading session is taken, unless I have already taken a trade for that day. Well, unless I have already taken a winner for that day, then I won't be trading anymore because I only take one to two trades per day usually. But even if I've traded that day and I'm taking a winner and there's another S tier setup presents itself and I'm still looking at the market, I will take it again with half risk. That's my accountability step this week. That's a very frameable. I don't know if frameable is the right word I'm looking for. That's a recordable goal because I could obviously go back throughout the day after market's done trading, market's closed for a little bit, take a screenshot of every S tier setup that presented itself during my trading session and let me know if I took it. Because my setup doesn't occur all the time throughout the week or all the time throughout the day, but usually you'll get it 3 times a week, one time per day usually, one time per day in the session. So every time that I see that setup this week that I'm trading, that's what I'll be doing. Last but definitely not least, promise this is it. This week we have a pretty much a landmine, so I'm gonna let you know what days I'm gonna probably trade. I'm probably not trading tomorrow on Monday because there's no news, and we have what I'm about to show you. No news on Monday. Probably not gonna trade. Tuesday. Oh, bro, what in the world? This is the wrong week. Sorry. Monday we have no news. I'm probably not going to. What in the world? Sorry, guys. Okay. I was looking at this. Monday we have no news. I'm probably not gonna trade. Tuesday we have Fed speaker at 11 or was it 10 a.m.? I'm pretty sure I saw Powell drop on one of these days. But I feel like I'm off. Dude, what in the world? Oh, okay. I don't know. I was like, bro, I literally looked at this right before and earlier today. But going forward, I was in June. Now I'm here in July. Monday we have no news, so I'm probably not gonna trade. We could have a good setup, so I'm not gonna completely put Monday off because since we have a lot of news at the end of the week, they could use Monday to do what they're gonna do in the beginning of the week, like come up to match this high or something like that, and then go back down and consolidate for the rest of the week. That's possible. So I will be looking to see if something occurs tomorrow on Monday, but I'm not pressed to trade tomorrow. Tuesday, Fed chair, so I'm not trading in an AM session. Easy enough. And I'm probably not going to trade PM session, but I could come back and look at the market on the PM session. So Tuesday is indecisive. I'm not sure if I'm going to trade that day, but I know I'm not trading in my normal AM session. Um, Wednesday, Fed Chair Powell speaking again in the AM session. So again, I'm not trading on Wednesday. I know you guys are like, man, Corlin, do you ever trade? Yes, on the days that I know that I'm most likely to win. Um, Wednesday, I probably will trade on the PM session. It's more likely that I trade Wednesday's PM session than Tuesday's. Why? Because we have a note auction. So later in the week or later in the day, we could see volatility around 1 o'clock. So I will be looking at my computer at Wednesday's PM session. I might trade that day. Um, Thursday, I'm not trading until 8:31. Why not eight? Why not before 8:30? CPI. I'm not standing in front of a train. If you like to do that, go for it. 8:31. So it's likely that so far the most likely day that I'm going to trade is on Thursday, 8:31. So after this initial move. Um, but even on Thursday, I probably will end up trading in the PM session as well. Why? Because we have a 30-year bond auction. So this week is a little bit. It's going to be a pretty interesting week to trade just because it's so like it's a landmine field. It's definitely a landmine field. So you got to pick your spots and get out. But I know for a fact. Well, I don't know for a fact, but the most likely day that I'm going to trade this week is Friday because we got PPI. That's a news event that me personally, Cortland Taylor, not advising anybody else, I can trade PPI. I know how to trade around PPI, so I'll probably trade PPI. And then there's also Michigan consumer sentiment at 10. So this can be a day where I have two trades, but we'll see how it goes. But I know I'm probably most likely going to trade on Friday. Second most likely day is Thursday PM session or Thursday AM session 8:31 onwards. But it's probably gonna be Thursday later in the day. So I'm gonna say Thursday PM session, Friday AM session, Wednesday PM session, and that's probably gonna be it for me this week. And then I'm gonna look at Monday and see if anything obvious presents itself because it's gonna be more so like based on macros, but I'm not gonna get into any of that. So, anyways, I hope you guys have an amazing, beautifully blessed week. Thank you for listening to me jawbone for 47 minutes, 48 minutes. Where I said it was gonna be a 20-minute video. Can't really say anything about ICT no more because I see how quickly this happens. But anyways, you guys are amazing. God has a plan to make your life as if nothing ever went wrong. Hold true to that. Keep it pushing and know that every single loss is just a lesson if you look at it that way. I shall talk to you guys later. Bye.